Hello YouTube, welcome to another episode of Market Maker Mondays. I am the Nomadic Trader, and in this one we're going to do, as always, an overview of S&P 500, and we're also going to have a look at NASDAQ and the Dow index as well, because the Dow definitely seems to be leading, and from what I can gather, that's because there's only around 30, if not 30 exactly, companies within that index, and those are all companies that you would expect to have the best performance in the most difficult times. And I'm going to actually do the analysis initially on the actual the delayed data that I have, which is the continuous chart for ES, as opposed to what my broker uses, because I've actually got all my annotations set on that one and I didn't want to disturb them and redo them. But what I wanted to do is on here, if we go to the monthly time frame, you can see that we have this, I'm not going to call it a trend line because I'm not really using it in that regard, but it's the mean of this. So if we were to move this to the mean, we've been going up since 2008, relatively level with this, and then we've started to peak a bit here, and then obviously with the pandemic, and they were just printing money, and they were doing basically really low interest rates. All the big businesses, they capitalized on all of that, and in the form of cheap money. And that's why we saw this mad hysteria here with this ridiculous V-shaped recovery. And now what we're seeing is the reality. So one could argue that we'd already priced in the recession by all of this hysteria here. And we're making our way back down to this level. So we've got that there. And then if we have a look on the monthly time frame, taking notes of the swing highs and lows. So we've obviously got this higher high, we've been going up in market structure, and then we've actually broken down. We've got a lower low, lower high, lower low, lower high, lower low. So I am anticipating another lower high here, because otherwise what's the point in doing trend analysis if we're not going to use that and actually trust and respect it? So that leads me to this, and Miranda in the Discord group was asking about the dealing ranges and about how so many, they all coexist, and like, what do you trust? Well, I only use the free version. I did have a look at taking use of the Black Friday deals, but in reality, I don't need live data because my broker provides me with live data. I don't need more indicators on the chart. I don't need multiple chart views. Plus, I'd have to go to the Pro Plus plan to get 3 charts within one window. And it just doesn't make financial sense. I don't need what they're offering, and which is sad really, because I really did want to get a bargain and go back to Pro, but I didn't. However, we have this dealing range here on the monthly time frame. So what I don't like for this being bearish right now is this here, this pivot point. So where we have a look at the Dow, you can see how this level here, even going further back, this was like a pivotal point, and this is a lot of data. And then now we've actually come back up to retest, and then we've had seller failure, and then we've gone high, and then we've actually taken the high of the swing high here on the monthly. However, this could just be taking external range liquidity. We could consolidate and then come back down here. So it's not great for a bearish sentiment across the indexes. However, it might just be SMT divergence. So you can see here we've actually got a higher high print, and then here these are really big lower highs. So take us back into the S&P and then go to the weekly time frame. Last week we had an inside bar or a weekly inside range, so we can be expecting price to either consolidate within this or come and grab some of the liquidity. And if we do that on the weekly time frame, then that will take us back into this weekly fair value gap. We haven't completely closed in this. We don't need to either. We do have this left unbalanced, but we could just use that as an opportunity to come back to this significant level before we show signs of coming lower. And then what I also want to point out on the weekly basis is we've got the old high of the weekly bullish order block, which is a rejection block. And then I've got this drawn out as well, so I'll show you all the labels of it, but just to sort of rough and ready it. So we've left this high untaken for buy side liquidity. We've also got the low of the previous week and the low of the previous week for sell side liquidity, and we're going to be trading into this. But the structure on the daily time frame, which gives us the daily directional prediction, is bullish. So although on the monthly time frame we are bearish, what we need to look at now is we are within a premium environment just below a weekly PD array. Everything is still looking bullish to me, but we're actually starting to consolidate around this area. So if we see a push higher and a rejection, then that would actually give us more confirmation that we do want lower prices. Just going to have a quick sip of tea, guys. One sec. There we go. And so this is the consolidation range now. However, within all of this consolidation, you can see that we do have a push higher, and we've created this daily fair value gap. And this here is too clean. So the initial draw on liquidity for the buy side for me is this. And a good opportunity to do that really. So at the time of recording, this is Monday, 10 a.m. GMT. So we're already trading into this daily fair value gap. So this is your daily PD array. And then we've also got the lows here. However, in a continuation, I do favor us to actually reverse here on the 1 hour time frame to go higher into this. And this green box should be red. There we go. And I understand there are a lot of red boxes here, so I will use this as a key level. So this would actually give us a complete closure of this daily fair value gap here to the downside. So this is a bearish fair value gap on the daily. This is a bearish fair value gap on the weekly. We've also got that overlapping here. So there's a lot of bearish confluence just above these highs here. So what this could present itself like is a big continuation move to really sucker in everybody. And then once we hit this level here, then I'm expecting it to melt. That's what my expectation is. If I go over to my broker data, that's what I've got here. So in terms of the dealing ranges, we've got this big dealing range here on the monthly time frame because we've actually taken the buy side liquidity and then we've taken the sell side liquidity here. So in terms of a continuation move, we've got a lower high, lower low, lower high, lower low on the monthly, and then we're expecting a lower high here, especially now because we're seeing very similar price action on the NASDAQ. We still have room to move higher, and in line with what I was saying on the S&P 500, the move higher is going to take us into this PD array, which then puts us back into a premium on the monthly time frame for NASDAQ, which lines up here. So we're trading higher overall in the US 500, and we are massively trading higher we've also got, not only have we got this monthly divergence, I've absolutely completely gone blank and I forgot what ICT calls it now, but we've got this, there we go, SMT divergence on the monthly, but then also on the daily here, we've got this SMT divergence. So I don't think we've gone high enough to actually take out the liquidity fall here, but I could be wrong. Obviously, once we have a lower high and then a lower low, that will be fully confirmed on the daily on the Dow. However, we can see here that we do have that divergence. Now, there is a lot of bearish pressure. We've actually had this breakaway gap, and we're creating this fair value gap on the daily. So it could be a case that this is a 3 drives pattern. So, I mean, we could even say 1, 2, and then 3. And then that means that we don't need to run that because we're already building in that buy side liquidity for the bigger orders. And then what I've got nestled here is this is the current dealing range, because if the daily time frame is to remain bullish, this needs to remain intact. If we were to come back down and we were to literally just take these lows but just tap into this old high again of this weekly PD array, then that could give us still an opportunity to come back up to take these equal highs and then to trade higher into this. So the way I actually trade the market is I will have all of this higher time frame narrative on, and then I'm trading between the daily runs. So we've actually got now a confirmed swing high here. So this on the daily time frame is bearish for your lower time frame trading. So when you come down here on the 1 hour time frame, we've had a breakaway gap here. So if I was a gambling man, based on the information that I can see here, what I would like to see is a trade back up into this breakaway gap, this imbalance in price. So this is actually the weekly open gap. So Monday's trading, obviously we've left this open. We've actually come back into closing some of this imbalance here on the 1 hour time frame. We've rejected it, we've traded lower. But now we're actually within the realms of a discount within this dealing range on the daily. So if we see maybe a 15-minute reversal here with a grab of the sell side liquidity, which will actually give you a Judas swing, then that would actually give me an indication that we do want to come higher. First objective will be to come in to close this range. Second objective is going to be to come and take the liquidity above these relevant equal highs. So what would that look like? So yeah, so we've run out the liquidity here. So first and foremost, we've suckered buyers in. Okay, so we've taken out the sell side, then we've actually traded above this short-term high into this 15-minute PD array. And we've had this big sell-off here into the 1 hour PD array. We haven't really come into a deep discount at all. So where are we? So 51 minutes left of this white bullish 1 hour candle. So we don't know what this is going to look like yet. So we need to give this more time. And then I always like to try and trade in the direction of the 1 hour order flow, because of what that does then, that means that I'm actually trading within the momentum of the daily run rather than doing a counter trend trade. So what that looks like is from this low here to this high. So where we have a look from the weekly PD array, the old high, we've actually got this rejection candle and we've traded back up to the high. Let's have a look to see what price action looks like here as an example. So here we go. So a big rundown, and then we've actually come back up and we've rejected here. So then we've actually had a shift in market structure on the 1 hour time frame after we've reached this high time frame PD array. And then later on in the week, we've actually created these relative equal lows. And then this was Tuesday, I believe. Yeah. So Tuesday's trading, And what we've done is we've actually got that advanced market structure, which is basically an inverted head and shoulder. So you've got the head and then a shoulder either side, which is indicated by short-term swings either side of these moves. And then, so it's a nestled crown effect. So if we were to have a look at the head and shoulders, forget this median line here because we don't use trend lines, but just to outline that, what that looks like in price. And then it's a little less clear here because we've had a lot of consolidation due to the holidays, Thanksgiving, that was on Thursday of last week. But in terms of an insight into the price action, so this here is still bullish. We could consolidate here around all of this level. We're not too sure yet. Based on the weekly time frame, that is possible because we are actually showing some indecision. So it's not exactly clear what we want to do, but if we come back down early in the week and then we have seller failure, that would give me a strong indication that we actually want to come and take out these relative equal highs. That would be the only trade idea that I have, unless we come back up into here by midweek and we have a big rejection. That would actually show me an indication that this would actually be the high of the week. However, if we come back down to see seller rejection and then we're trading higher Wednesday into Thursday, that would actually give me an indication that we're going to print the high of the week on Thursday, and then we'll close back into the range perhaps on Friday. But obviously all that's anticipation. All we can do is we can react to price as and when it presents itself. Hopefully that's actually given you an insight into what I'm looking at for this week. And we've included some work on the dealing ranges. So we've got the monthly dealing range, which is this here. I would say this is still going to be my weekly dealing range as well, because this price action is so contracted. So it's not like this here. This is it's basically it's a run, it's consolidation, then it's a run, and then it's a consolidation. So this doesn't look very impulsive to me, although it does have me sweating because I basically closed out a lot of positions on the US 500 in my investment because I needed to set up separate funds for my kids. So originally it was all in the one pot, but yeah, for personal reasons, I've had to basically close out everything that was in the stocks and shares ISA to actually split it for my two children, so then I can free up more investment opportunity for myself. So when I actually did that, we were at a discount, and now obviously we've had this rally, so I haven't reinvested at this point. I'm actually waiting for a break lower below this low before I do actually pull the trigger on those investments. So we've got this bullish price structure. We are starting to stall ahead of all of this confluence. We are seeing some SMT divergence here, which is also a really good indication that we might not need to see prices move higher. I wouldn't like to see equal highs left open ahead of any long-term shorts, because I would see this as a target once we've actually grabbed some more sell-side liquidity. And from a daily perspective, bringing that down, narrowing it down to the lower time frames, we are now trading into this daily fair value gap, which also puts us into a discount. So this could give us Tuesday's low, a spike down to take the 1 hour sell side liquidity to then turn around and trade higher. That would be my what I'd be favoring for this week's worth of trading. Any feedback or any questions, anything that I've covered that you didn't quite understand, please ask me in the comments below. Please like and share the video, and also please remember to subscribe to the channel. The community tab is open, so if you want to join in there, you can do. And then also please join us in the Discord group as well for any Q&A that you might have. But until next week, thanks for watching, and I'll speak to you soon. Safe trading. Bye.